So I'm going to do this blog post here to do a retrospective on where we are 1 year after the coronavirus pandemic began, but more importantly, focusing on this profound and extraordinary, mind-blowing circumstance that we find ourselves in with regard to foreclosures. The title of the blog post is "Foreclosures in the United States of America Are Illegal," and really that's going to be the case for the rest of 2021, and I'll drill into that in a second. But for a moment, let's just go back in time. Look at this blog post here, March 26, 2020. Think back on where we were. We started to catch wind of this thing, this coronavirus. And I don't think anybody, hardly anybody in this world actually had any idea how bad this was going to be, how long it was going to drag on. And I really do encourage you, go back in time. Think about where you were February, March 2026. I started hearing these things, watching the news about this coronavirus deal, and I thought, wow, this could get bad. But what really got my attention on March 26, 2020, is when I found the announcement from the Federal Housing Finance Administration that directed servicers of government-held loans, so that's FHA, Fannie, Freddie, VA, USDA, all the other ones, where the Federal Housing Finance Administration said to them, you should offer forbearance to your borrowers that are asking you for them. And that really got my attention because it was so broad, it was so dramatic, no qualifications, nothing. Just someone calls you up, give them a modification, give them a forbearance. And that was kind of mind-blowing. So I did this post March 26, 2020, and I had friends, colleagues, lawyers going, Matt, you got to be careful with that, man. You can't be out there convincing people or providing legal advice that they should not make mortgage payments. By the way, this isn't legal advice. This is just education. But folks thought that maybe this was a bit dramatic. Well, look at what happened thereafter. The news started coming in waves, and it only got worse as the months raged on. And this initial forbearance advice that was given, that was just for 3 months, gets extended out to 6 months, and then again, over and over again. And what's really mind-blowing about this is here we are a year later, and servicers all across the country had borrowers that went into forbearance. At one point in time, it was 8 million. Now it's down to only 3 million people. But what the forbearance program ends up being is a gigantic mortgage stimulus and relief program for those who had the good sense to take advantage of it early on. What does it mean? Well, it means that we have right now up to 3 million borrowers that are still in a forbearance program, and a forbearance program that acts as a gigantic form of stimulus that washes all across the country. So for those people that are still in a forbearance programs, what that means is that all of your payments during this entire period of time are getting pushed out into infinity and beyond. Now, it's fascinating to understand how this operated. Initially, the FHFA just said, hey, offer forbearance. They weren't really clear about what that meant. It just said, hey, don't take payments from people. All right, cool. You didn't know what was going to happen to those payments that were taken. Keep in mind, this is principal, interest, taxes, insurance. And again, they were really unclear about what that meant. But what became explicitly clear was for those 3 million consumers that got into a forbearance program, you, the servicer, cannot demand that the forbearance be paid back all at once. It's gotten even more broad and more dramatic. What the new rules that are out here being published now suggest is that for those people that didn't make a forbearance or that didn't make a payment during this 12-month period of time, you, the servicer, may extend the term for up to 480 months. It's 40 years beyond the term of the initial loan to cover that 12-month period of time that payments weren't made. Now, again, that sounds like it's discretionary. It sounds like maybe the servicers could, maybe should offer these. No. Read down below. What it says is the loan modification must be made available to borrowers experiencing COVID-19 related hardship, as the term is defined in the proposal. And again, what's mind-blowing about this here is for those consumers that are smart enough to take advantage of the forbearance program that still exists, you can go for an entire year not making a mortgage payment, not making taxes, not making insurance. And that term of the loan is extended out 480 months, 40 years, additional of the loan. So you take the entire 12 months you haven't made something, just take all those payments and push them on the back end, because look what happens. Not only is it extended out 480 months, but you can't increase the borrower's periodic interest principal payments here. It's just absolutely mind-blowing, the extent and the reach of this whole program right here. Well, it goes even beyond that. if you go up to the other part of the rule, what they're telling the servicers are extend out the hardship period for the rest of the year. So that means that we're looking at into the 2022 period before foreclosures could be filed, which is just absolutely mind-blowing here, putting foreclosures on hold, essentially making them illegal in the country until 2022. Now, this rule, if it's adopted, and in all likelihood it will, because it's made it this far along into proposal status, what's mind-blowing about this only applies to the government loans, Fannie, Freddie, VA, all the other ones, which is the majority of loans. But the reality is that all of the other servicers are picking up on this as well. So we have almost no foreclosure activity across the country, residential foreclosure activity. And what's happening? You're seeing this dramatic spike in real estate prices. So again, I think what the feds are telling us and the people in real estate, the banks are telling us is foreclosures bad for the economy. Let's tamp them down. Let's snuff them out. And if we can keep foreclosures out of the economy, we'll see continued price appreciation. It's gross manipulation of the otherwise private market, but you're seeing it in a dramatic way. So this rule applies on the residential side of things. But there's something else that's happening. Oh, well, before we go to the commercial side, again, what the federal government is telling Americans is go into forbearance. Don't make your mortgage payment. Why? One can only presume that they want that money. This federal policy that's been adopted and is being pushed very aggressively. They want that money to be out there for consumers to spend on trips and restaurants and everything else. But here's the other thing. There's big warnings out there that the feds are giving to the servicers. What is the Consumer Financial Protection Bureau saying to the servicers? You had better be proactive. You better be working with borrowers. You better address language access, evaluating income fairly, handling inquiries promptly. The feds are telling the banks is you better not put us back into another situation. We've got a wave of foreclosures. It's just mind-blowing the extent of the involvement of the feds now in the private affairs of banking. And it gets to one of the things that I've said from the beginning about this, that just mind-blowing. Again, back to my post in March 26, 2020. It's to say just how much power the federal government has to step in and say to the banks, stop this, stop foreclosures. And the problem is, once they flip the switch and we understand that the feds can tell private industry, we thought, banks not to do foreclosures, they can't, as a practical sense, tell them to flip the switch and start throwing millions of consumers back into foreclosure again. Again, it's sort of prescient reading this thing here. It's like, wow, look at this question I'm asking, March 2020. How big is this catastrophe? How bad is coronavirus going to be? Well, we're learning. Here we are a year later. Well, all right, now flip the switch. Let's talk about on the consumer side of things. I've also wondered, well, even though we can kind of understand now because of the forbearance and everything, why is it that we're not seeing residential foreclosures? I didn't understand, why are we not seeing commercial foreclosures? We know that there are strip malls and restaurants and businesses all up and down Main Street and side streets and everywhere else all across this country that aren't making their mortgage payments. Why are their lenders not filing foreclosure? And then I find this little nugget here, which is, again, mind-blowing. Early on, this is in March 1, 2020, the feds, the Small Business Administration, launches this program where they are going to start automatically deferring the payment of principal and interest on SBA 504 loans. What does that mean? That means we've got millions upon millions of businesses all across this country who own loans on buildings and assets and everything else like that. And the Small Business Administration jumped in and said, hey, business, don't bother making your payments. So a lot of these things were probably on automatic withdrawal and things like that. And the payments just stopped coming out of the borrower's account. Why? Because the SBA, the feds, had jumped in there and started making those payments for them. Again, this is mind-blowing stuff to know just how dramatic the involvement of the federal government is in the private banking and mortgage world. All right. That's the business side of things. Think about the transfer of wealth that this was. Think about the amount of money that this program here results in a flush of capital into otherwise private businesses as a gratitude or grace of the federal government. Here's another one for the working folks, these eviction moratoriums. How in the world do we live in a country where a consumer signs a lease obligation and the federal government can announce by fiat that no need to make rent payments anymore. That was the tenant eviction ban that still exists more or less today. What's the end product of this, or what is the end result of where we are? Well, here we are a year into this pandemic that many of the naysayers, me primarily, and others including, thought, oh my God, this coronavirus thing, this shutdown of the economy, it could be horrible. It's going to be a catastrophe. It is exactly the opposite in the most dramatic of ways. What you see has happened in the last year is this explosion of wealth that's being carried by Americans. Bloomberg here estimating $1.7 trillion in excess savings. How do you like that? They're calling the $1.7 trillion that consumers are holding on to as excess saving. And some are calling it revenge spending, right? So 2021 is going to have Americans flooding back into vacation destinations, flooding back into shopping in a manner that we haven't seen before. It's going to be like the 1920s all over again. And that really is extraordinary. So again, not only have we not had this collapse of the economy, we have more wealth than ever before. Let's get to this one right here. This is absolutely incredible. When you look at what the savings rates are beginning at the pandemic, 7.6%, and then look at it as we crawl into the depths of the lockdowns, March and May, 24%, creeping in here to 21, 20%. So what we're saying is that consumers throughout the pandemic have actually saved more. It's creeped up to higher levels than we've seen in a long, long time. Where did it come from? Well, the interesting thing is this chart right here. Here you show a relatively static savings rate. That's the gray line right there. But then put in those red. That's the funny money. That's the flush with cash money that comes from the federal government. The feds have just pumped in trillions of dollars into the United States economy, just throwing out gifts of bread and circuses to the American people and urging the people, go out there and spend. I mean, what was the stimulus money? The stimulus money said, go take that money and stimulate the economy. Don't save it. So this is actually probably a bad thing. This is contrary to what the feds wanted people to do. The $1,600 to $2,000, the whatever that money is, the unemployment bumps and everything else like that, that money was specifically purposed so consumers would go out and go into restaurants and go out to bars and spend. That's what they needed to do. All right, so here we are a year later, and what happens? Well, most people raised, the way probably most of us were, scared of the deficit, scared of, the kind of spending that we're seeing right now because of the big boogeyman inflation, right? We heard the dollar isn't going to be worth anything. Inflation is going to go through the roof, and that's going to cause an economic catastrophe that they're handing off to our children. I still kind of believe ultimately that's what's going to happen. But I think one thing that we all miss, the naysayers, those people that are crying that the sky is going to fall, and that is this. The size of the American economy and the relative strength of the American economy relative to the rest of the world. And what do we mean by that? Well, when you think about the American economy and you think about what's happened here and where we are relative to the European Union, the United Kingdom, Japan, China, these other places, right? It's that as bad as things are here. If you're in Florida or elsewhere, you surely don't see that. If you're in the boating industry, you don't see that. But as, quote, bad as things are in the United States of America, we are dramatically better than the rest of the world. So you look at China, you look at the United Kingdom, you look at particularly the EU, and you see these crash of their economy compared to the United States of America. We're doing really well. So what does that mean? Well, all this spending that's occurring right now in 2021 may be offset. We could buy our way out of it with the rest of the world economy and the necessity for them to participate with us in a market-based economy. It's kind of a mind-blowing thing to think that by in the last crash, we talked about it foaming the runways. Right now, we're just blowing air balls of cash out there into the consumer economy, and we may not see the consequences for at least the short period of time. We know we're not going to see foreclosures of any magnitude or at all, frankly, for the rest of 21. So get out there. It's like the 20s all over again, the roaring 20s. Spend money, have fun, go on vacations, go to restaurants, because the federal government's going to jump in with money to save from the economic consequences.